Hello and welcome to a brand new show of Reboot India, where we debate, deliberate and discuss what is the way forward for India and how can we come out from the second wave stronger and much more firmer in terms of resolve and in terms of economic activity. Now, power is one sector which in a sense in the last 10 years has gone through a painful consolidation. There were a lot of state level and also central level issues. What is the status of power sector, power demand? Tata Power is in the middle of a complete reboot exercise. They are looking at revamping and changing the complexion of the company. So to discuss all that and much more, it gives me great pleasure to bring on board the CEO of Tata Power, Mr. Praveer Sinha. Mr. Sinha, fantastic to have you back and thank you for joining us. Before I get into specifics of the grand vision which you've shared in terms of the transformational changes Tata Power will adopt, I want to first understand from you, what is your assessment of the economy? Because power demand and power generation is one thing which is a direct indicator to which way the economy is moving.
Good morning and thank you for having me on the show, Deepan. Always a pleasure. I think the power demand has gone up actually in last 1 year. Though for a certain period of time last year when the COVID started, we saw a huge drop of nearly 20 to 25%. But in the months of November to March, the consumption went up. In fact, the peak demand went up to 185, 190 gigawatt, which typically happens in the summer months. I saw yesterday also the demand was 186 gigawatt. And this incidentally used to be the highest in 2019 in summer months. We expect this year, if things come back to normal next month and the lockdown is reduced and removed in most of the places, we will possibly see a peak demand of nearly 210 gigawatt. So that's where we are on the power sector. On a cumulative basis also, the demand has gone up marginally. They normally used to go by 4 to 5% annually. Last year has been about 1%, 1.5%. So we do expect that the power demand will increase once all the factories and industries open up and some of the commercial establishments open up. I think this is a good sign that the Indian economy is able to come back very quickly once given the opportunity and things stabilize. And I do expect that this will continue in the future months also.
When do you see at a national level the pre-COVID levels for power demand would be achieved? And again, the pre-COVID levels, Mr. Sinha, is not a high watermark because last couple of years have been difficult for the power sector.
Yeah, very difficult for me to do a prediction because one does not know whether we will have a COVID-3 or something like that. But I would say that once the lockdown process gets reduced, the partial lockdowns are removed, we will possibly have that sort of demand in the next 2 to 3 months. But this is subject to, we don't have the third wave and we do not have further challenges in terms of the spread of COVID in the country. All the industries, all the commercial establishments are waiting to reopen and go full out to catch up with their yearly plan. And I do expect that once that happens, the demand of power will increase.
The information and the vision which you've shared, we understand that Tata Power is going through a process of transformational change. And one such example is that right now you get about 30% of your business from non-renewable. You want to take it to 80 by 2030. How would you achieve such kind of a transformation for a sector which in a sense is still regulated and still has a lot of issues both at the state level and also at the regulatory level?
So as we had earlier informed, we are not setting up any more greenfield or brownfield coal-based plants. So all our investment is in renewable business. And from our present 30% non-carbon will become about 60% by 2025 and 70-75% by 2030. And we do have a roadmap whereby as and when our coal plants complete their useful life and the PPA gets over, we will decommission them. So we are very clear that we want to move away from carbon-based generation to non-carbon generation. Now, having said that, I think there are the technology intervention of decarbonization also gives the technology of distributed energy. And we are seeing that large number of consumers are now moving towards whether it is rooftop solar for residential purpose or industrial and commercial purpose. Huge number of opportunities are coming up where industries, commercial establishments, and residential people are coming forward. We have ourselves extended our services in more than 100 cities. And in last 3 years, we find that the traction is phenomenal. In fact, the growth has been nearly 4 times in the rooftop segment, and we expect this will increase by 10 times in the next 5 years. So that's the opportunity that we are looking. We are also looking at the opportunity of using solar pumps in villages. India has nearly 30 million pump sets, out of which 9 million are still using DG set. The government program of Kusum talks about 4 million pump sets to be solarized, and Tata Power again will play a very, very huge role in this effort. So I think the technology disruption that has happened will help consumers to now generate electricity themselves and use it themselves and give it back to the grid, or also in some cases use it for peer group sale or within a certain cluster of industries or cluster of consumers to be supplied.
Okay. But what happens to the existing regulated businesses in that case? As you migrate from being a thermal power producer to a complete carbon neutral and renewable power player, what happens to the regulatory part of the business?
So you need to do a balancing. Right now we have 90 to 95% of our business, which is 100% regulated. Now, in a regulated business, there are no famine, there are no feast. You get a very, very steady return, but you do not get any upside for the value-added services that you can provide. We are, because of our entry into rooftop and solar pumps and various other distributed businesses, as also into EV charging, we expect that over a period of time, we will have possibly 60-40, 60% regulated and 40% non-regulated. That will give us the opportunity to take the upside of the market, especially in many businesses where we provide much better value-added services and better consumer services. We will be able to get a much better valuation and a much better upside. And the regulated business will continue to give us enough cash to help us in the growth agenda that we have. So I think a good mix of regulated and non-regulated business will be a very good combination for Tata Power going forward.
Your return on equity, a very important benchmark, has been in 5 to 7% in last couple of years. Do you see that moving as you progress forward to double digit?
So our return on equity has been low because of Mundra. That has been negative and negative by a very large margin. While all our other regulated businesses, whether it is the generation businesses or Mumbai or Maithan or Hydro, has been doing very good. Similarly, our distribution and transmission businesses have been giving us double-digit ROEs in 12 to 15% range. Now, going forward from having overcome the Mundra challenge and the growth plans that we have and moving towards more market-driven businesses, we expect that our 6 to 7% will become double in the next 5 years. And that's the whole target on which the company is working. And the roadmap that we have set for ourselves, we feel very confident that we will be able to reach this sort of number.
And even at the Mundra level, would you be looking at I mean, I'm trying to understand at the Mundra SPV level what changes we should expect, because that in a sense has been the biggest challenge for you.
So Mundra, we did carry out certain changes. The first is we reduced the debt of Mundra from 8,000 to 4,000 crore, and to that extent, the financing cost has come down. Secondly, what we did, we started blending coal. Earlier, we used to use 100% Indonesian coal. Now we blend and we get a lot of opportunity to buy spot purchases from various other countries and also distress sale of coal that takes place. So that has helped us to control the cost of generation and the under recovery that happens from Mundra. The second thing is when we look at Mundra, we look at as a combined of the coal company and Mundra. And on an overall basis, we find that when the coal company starts making more money because of higher coal prices, the Mundra under recovery increases. But when the coal company is making less money, the under recovery of Mundra reduces. So to that extent, we are more or less quit. In fact, on a consolidated basis, if we see both of them, the underlying EBITDA becomes virtually positive, and we are able to sustain this going forward. And that's where the changes that we brought in Mundra was to ensure that it becomes self-sustainable, and we have then money from our existing businesses to take the growth agenda for ourselves.
How large could be the solar EPC business for you, which includes batteries, grids, kits? How large is this business? Is this a high CapEx business, or you've done your investments here already?
So the EPC business does not require capex; it only requires working capital. From 1,000 crore revenue of EPC for nearly 10 years, we went to 2,000 crores in 2020. Last year, a COVID year, we crossed for the first time 5,000 crores. And the way that we are looking at it is that this EPC business will not only cater to the utility scale solar panels that we will manufacture and do the erection and commissioning, but we'll also do it for other players also, other developers also. It will also support our rooftop business. It will also support our solar pump business. And since all these businesses are growing by 10 times, I do expect that our returns and our revenue from the solar EPC will grow much faster than what it has happened in the last few years.
If I look at Tata Power right now, and let's say if I look at the two businesses, one is the high growth business, clean business, the new age business. Then you have the thermal business, more like a regulated business, a business where you have challenges in terms of payment, receivables. For somebody who wants to invest in the stock, he would say, I don't like the old Tata Power, I like the new Tata Power. So eventually, would you split it into two?
It has to come to a certain size. We are definitely looking at how we can integrate our new businesses, especially our renewable. And in renewable, we are right from manufacturing to EPC to utility scale to rooftop solar to solar pumps and then microgrids and EV charging. So there is a whole lot of businesses that is the new business. And we are trying to see if once it attains a certain size, we can possibly look at opportunities. But these are again under discussion. What is important is that fundamentally these businesses have to be very strong and should give the type of returns for our shareholders. And that's what is the task that we have in hand, and we are working towards that.
So what happens to the Bhumi stake? Because that's related with coal. It's a coal mining business. You are migrating away from the thermal business to a new business. So what would be the importance of Bhumi for Tata Power in the overall scheme of things?
So as I mentioned to you that our coal business and Mundra are linked to each other and they provide a natural hedge. However, we definitely would like to move away from many of our coal businesses. We need to look at the right timing and the right pricing that we can get. And if such a thing happens and if we are able to get a very good return on that, we can definitely look at divesting.
But is it logically possible for you to exit some of the long-term contracts in your in the power non-renewable business? Because the business contract, my understanding is that these are PPAs, they are filed for 15 to 20 years. Even if you want to exit these businesses, can you exit these businesses?
I don't think, and that's why when we say that we will still have some coal businesses in 2030 and 2040, is because we have existing PPAs which are there up to that period, and we cannot come out of those PPAs and cannot run away from our responsibility. So we are very clear in our mind that we need to complete the existing PPA arrangements that we have and the useful life of the plant. And once that is completed, then we are free to decommission those plants and come out of it.
Globally, a lot of banks have now officially said, banks like JP Morgan, that we are very ESG conscious. If I speak to some of the sovereign funds, they are saying we are very ESG conscious. Tata Power has also said that we are on the right side of, we want to be on the right side of the ESG narrative. How would you achieve what looks impossible right now, which is that you are aiming to be carbon neutral in the next 25 years?
Yeah, as we have earlier also mentioned, that we do not want to add any capacity. Our existing commitments, we cannot run away from them. We need to complete those PPA arrangements. And also, we need to ensure that we enhance the speed at which we add our renewable capacities and non-carbon capacity. So we expect that by 2040, nearly 95% of our generation will be non-carbon. And to that extent, we will be moving towards becoming more ESG compliant than what we are today. But this cannot be a knee-jerk reaction where we immediately, without taking cognizance of our long-term commitments and our arrangements with the existing PPAs.
The solar power business, Mr. Sinha, in India has not seen too much of success. Solar prices per unit were very different versus what they are. The cost of producing solar energy per unit has come down. The price of the price of equipment, or in this case machinery, or the solar panels, that's also come crashing down. How do you visualize this business? You're talking about big plans here, but when there is so much of volatility in the realization, or in this case price per unit, how does one go about how does one go about doing long-term planning?
See, now, typically what happens is there are two parts of the business. One is the sale price. We have had very low price, but let me also tell you that last year there were nearly 40 bids that were finalized, and there were just 2 or 3 of them which were at a very low rupees. There were bids which got finalized in 2.90 rupees range also, and a large number of bids which were in the 2.30 rupees to 2.60 rupees range. So it would not be correct to say that 2 rupees is the benchmark and going forward that way. Secondly, the way the prices have gone up internationally, especially the Chinese prices for cells and modules, the new duties which will come from 1st April 2022. So we do not expect that the prices will be at that level. It will be at a much more stable level of 240 to 250, and that's the range I expect it will more or less mature at. Secondly, the import today is fully dependent on China. There's a large number of capacity that is coming up in India, and hopefully with more capacities coming up, the prices will come down from Indian sources. Also, the Chinese have been over a period of time expanding their capacity. So while the aberration may be there that in last 6 months or last 8 months, the prices have gone up, they also at some stage need to sell their product, having set up such large capacity. So I do expect that these things will stabilize. This sort of yo-yo happens for a certain period of time, but in the long run, these virtually edge out, and we will see a much stable price regime going forward.
So there was a time, sir, when your net debt to equity was at 2.3, little over 2.3. Where do you see it settling in 3 years?
Yeah, so we have already come to a level of 1.42. And for a power company, infrastructure company, this is a very, very healthy debt equity ratio. Typically, they are normally in 2 to 2.33 range. We expect that we will be around this level, around 1.4, 1.5 level.
What you're confirming to us is that you don't need too much of capital infusion. So can I rule out chances of any capital infusion or right infusion from Tata Sons?
It depends on what sort of growth that we do. We also have a lot of free cash flow from our existing operations. Many of our new businesses will start giving us better returns in the coming years. The DISCOM will start giving us much better cash flows in the coming years. Our rooftop and other businesses. So I think we will have enough cash for our growth plans that we have, which is quite aggressive. And if we require any extra cash flow, we will at that time look at the promoters and the market if any support is required.
One of the great businesses which is like a long-term business and more like an annuity business is the power distribution business. Your presence in Bombay, your presence in Delhi. Is that a business which you are looking at building up large? I know you've done some pilot projects in other cities also, but can that be a sizable business? Because you have the understanding, you have the art of picking up the pilferage in the power sector. You now have the best meters installed in the world. Would you be looking at expanding that business? Because that does not require too much of capital and it's an annuity business.
Yeah, that's a business that we will grow. Today we are 12 million consumers. We are the largest in the private sector. In fact, all the others put together do not even come to the 12 million number that we have. And we do expect that going forward, because of our experience in Delhi, Mumbai, Ajmer, and in Odisha, where it's both urban and rural consumers, we will be able to have a much better edge and domain knowledge and experience to take up more distribution opportunities once it opens up. The Electricity Act already talks about the de-licensing of distribution business, and we do expect that in later part of this year, when this gets amended by the Parliament, we possibly have a much larger play pan-India. So we'll become possibly the biggest distribution company in the country and with footprints in all over the country.
Two more questions. I've seen a video where you are talking about what changes could happen to various Tata group of companies because of EV. How far are we realistically away from EVs or the way how power is going to be generated?
So I think EVs is something which will happen. There has been delay again because of COVID and before that also, because this is a paradigm shift in the way the transportation will happen in future. But we are finding that people who start moving towards EV, the speed is very fast and the growth is tangential. So we expect the same thing to happen in India also. Once we have more models and more suppliers of electric vehicles in different categories, we will have huge penetration of electric vehicles. From our side, we are tied up with all the OEMs of electric vehicle manufacturers. And whether it is home charging or public charging, we are the first preferred choice. We are again number one today in public charging in India. We also are doing public charging for the fleet owners and bus depots. So the Mumbai, Ahmedabad and Jaipur bus depots have been done by us. So I think this is a great area. This is something which will get happened in next 2-3 years. And this will be a great opportunity for Tata Power because we understand the supply of electricity, we supply the EV charging, we supply the consumer experience that needs to be provided. And it very much gels with our distribution business that we carry out. So if you see our businesses today, there is huge amount of synergy. Distribution, rooftop solar, home automation, solar pumps, EV charging. They're virtually complementing each other in terms of giving better service to the consumer. And that's what is the work that is being done by Tata Power.
Well, Mr. Sinha, we've covered a range of topics today, from power consumption to EVA and what is the way forward for Tata Power. Really appreciate your time, and I really hope to see much more of you going forward. Good luck, sir, and thank you for joining us today.
Thank you very much, Nikunj, and always a pleasure. Thank you very much for having me.